Bitcoin is much more than just a digital currency. It represents a fundamental shift in how we perceive and store value in the modern age. The primary reason Bitcoin is so significant is that it operates outside the control of any central authority or government. Think about what happens to traditional money when a country experiences extreme inflation, like we have seen in Venezuela or Zimbabwe. The local currency loses value rapidly, and people lose their life savings because they have no other options. Bitcoin provides an alternative because its rules are governed by mathematics rather than political decisions. By holding Bitcoin, you are essentially opting into a global and transparent financial system that cannot be manipulated by any single entity. This shift toward a decentralized store of value is why many experts refer to Bitcoin as the most important financial innovation of the last century. At its core, Bitcoin is the first successful peer-to-peer electronic cash system. This is revolutionary because it allows individuals to send value anywhere in the world without the need for a financial intermediary like a bank. For decades, if you wanted to send money to someone in another country, you had to rely on a complex network of banks that charged high fees and took days to process the transaction. Bitcoin changes this by using a decentralized network that operates 24 hours a day and 7 days a week. Imagine sending a digital payment to a friend in Japan as easily as you would send an email. There is no bank to block the transaction and no central server that can go offline. Bitcoin empowers the individual by returning the control of money back to the people who own it. The technology that makes Bitcoin possible is called the blockchain. You can think of the blockchain as a public ledger that records every transaction ever made in the history of the network. This technology is vital because it solves the problem of double spending without needing a central authority to verify the balance of every account. In the traditional world, if you write a digital check, a bank has to confirm you have the money. With Bitcoin, thousands of independent computers around the world all maintain a copy of the same ledger to ensure the records are accurate. It is like having a giant digital receipt that is visible to everyone, but cannot be altered by anyone. This level of radical transparency and security is what gives the Bitcoin network its immense level of trust. One of the most important concepts for a beginner to understand is decentralization. This means that Bitcoin has no headquarters, no CO, and no central office that can be shut down or pressured. The reason this matters is that it makes the network incredibly resilient to censorship and outside influence. In a traditional banking system, a government can decide to freeze your assets or restrict your access to your own funds for any reason. Because Bitcoin is distributed across thousands of nodes worldwide, there is no single point of failure. It is essentially a global computer network that anyone can join, but no one can control. This decentralization ensures that the rules of Bitcoin remain the same for everyone, regardless of who they are or where they live in the world. Bitcoin is often referred to as digital gold because of its programmed scarcity. Unlike traditional currencies, which can be printed in unlimited amounts by central banks, there will only ever be 21 million Bitcoin in existence. This hard cap on supply is the reason many investors see Bitcoin as a hedge against the devaluation of the dollar or the euro. When the supply of a currency increases through money printing, the purchasing power of each unit typically goes down over time. We see this in the rising cost of groceries and housing every single year. Bitcoin provides a solution because its supply is fixed and predictable. By owning a piece of a finite asset, you are protecting your wealth from the hidden tax of inflation that affects almost every government-issued currency today. The process of creating new Bitcoin and securing the network is known as mining. Mining is necessary because it provides the computational power needed to process transactions and keep the ledger secure. High-powered computers compete to solve complex mathematical puzzles, and the first one to solve the puzzle gets to add the next block of transactions to the chain. As a reward for this work, the miner receives newly created Bitcoin. This is similar to how gold miners must expend physical energy and resources to extract gold from the earth. In the Bitcoin network, this proof of work ensures that the system is backed by real-world energy and hardware. This mechanism creates a secure and self-sustaining ecosystem where everyone is incentivized to act in the best interest of the network. The origin of Bitcoin is one of the greatest mysteries of the digital age. It was released in 2009 by an anonymous person or group using the pseudonym Satoshi Nakamoto. The reason the creator chose to remain anonymous was to ensure that the project remained truly decentralized from the very beginning. If there were a known founder, that person could be targeted, arrested, or influenced by powerful entities who feel threatened by a new financial system. Bitcoin has survived and thrived for over a decade without any leadership because the code is open source and belongs to everyone. This anonymous beginning is a testament to the idea that Bitcoin is a tool for humanity rather than a product owned by a specific corporation or individual. When you own Bitcoin, you are actually managing a pair of digital keys known as public and private keys. Understanding this is crucial for the security of your assets because these keys are what allow you to access and move your funds. Your public key is like an email address or a mailbox where anyone can send you money. Your private key is like the secret password or the physical key to that mailbox that only you should have. If you give someone your private key, they have full control over your Bitcoin. This is why the phrase, "not your keys, not your coins," is so popular in the community. By taking responsibility for your own private keys, you become your own bank and eliminate the risk of a third party losing your money. Bitcoin undergoes a programmed event called the halving roughly every 4 years. This event is a critical part of its economic design because it reduces the rate at which new Bitcoin is created by exactly 50%. The reason for the halving is to ensure that the total supply of 21 million coins is released slowly and that the asset remains scarce over time. We saw this happen in 2020 when the reward for miners dropped from 12.5 coins to 6.25 coins per block. Historically, these halving events have preceded significant increases in the price of Bitcoin because the supply of new coins entering the market decreases while demand continues to grow. This predictable issuance schedule makes Bitcoin one of the most transparent and reliable assets in financial history. For most people, the journey into Bitcoin begins on a digital exchange. These platforms serve as the bridge between the traditional banking world and the new world of cryptocurrency. The reason exchanges are so popular is that they make it very easy for beginners to buy their first fraction of a Bitcoin using a debit card or a bank transfer. You do not need to buy an entire Bitcoin to get started because each coin is divisible into 100 million smaller units called satoshis. Major platforms like Coinbase or Kraken allow you to start with as little as $10 or $20. This low barrier to entry is democratizing finance by allowing anyone with an internet connection to participate in a global market that was previously reserved for the wealthy. While Bitcoin offers many benefits, it is also known for its high level of price volatility. This means that the value of Bitcoin can go up or down by a large percentage in a very short amount of time. The reason for this volatility is that Bitcoin is still a relatively young asset class with a much smaller market cap than gold or the stock market. Because the market is smaller, large trades or news events can have a disproportionate impact on the price. For example, a single tweet from a famous billionaire or a change in government regulation can cause the price to swing wildly. For a beginner, it is important to understand that these fluctuations are normal and that a long-term perspective is often the best way to navigate the market. In recent years, we have seen a massive wave of institutional adoption for Bitcoin. This marks a turning point where major banks, hedge funds, and even public companies are starting to hold Bitcoin on their balance sheets. The reason these large players are entering the space is that they recognize Bitcoin as a legitimate financial asset that provides diversification. Companies like MicroStrategy and Tesla have famously converted hundreds of millions of dollars of their cash reserves into Bitcoin. Even legacy financial institutions like BlackRock and Fidelity have launched Bitcoin-related products. This institutional support brings a new level of credibility and liquidity to the market. It suggests that Bitcoin is no longer just a hobby for tech enthusiasts, but a foundational piece of the global financial infrastructure. In conclusion, Bitcoin is a revolutionary technology that combines the scarcity of gold with the portability of the internet. We have explored how it operates on a decentralized blockchain to provide a secure and transparent way to move value without the need for banks. The reason this guide is so important is that the world is moving toward a digital future, and understanding Bitcoin is the first step in protecting your financial freedom. From the mysterious origins of Satoshi Nakamoto to the institutional adoption we see today, Bitcoin has proven to be a resilient and transformative force. If you found this deep dive helpful, please make sure to like the video and subscribe to the channel for more educational finance content. For our discussion today, I want to hear your thoughts in the comments on whether you think Bitcoin will eventually replace gold as the world's primary store of value. Thank you for watching, and we will see you in the next video.